Credit scores are doing something very, very strange. Hey, everybody, you're watching Bull Boom Bear Bust. My name is JJ, back here with another dose of economic reality. Today, we've got a good one here. U.S. credit scores. What should happen when people get buried under a lot of debt? And not just a lot of debt, record breaking amounts of debt. And in fact, in a few different areas, if you look back compared to the financial crisis, 2007, 2008, people earn twice as much debt now as they were back then. Credit card debt is $1 trillion combined total, collectively. Car loan debt is double what it was in 2008. Everywhere you look, debt is much worse. So shouldn't that be a bad thing? Shouldn't credit scores actually drop? Are you a better credit risk with a lot of debt, or are you a worse credit risk? Well, according to the banks, debt is good. You are a better credit risk. And according to the credit bureaus and the agencies that do the ratings, TransUnion, Equifax, Experian, they're saying, listen to this. Almost fell out of my chair here. The consumer is very healthy, or quite healthy is what they said. Consumer credit scores held steady in September for the third consecutive month, averaging 701 according to Vantage Score. And this is something very, very strange. When people have a lot of debt like we see now, again, record levels of debt. And it's just getting worse. Every quarter you look at it, the debt gets bigger and bigger and bigger. So what do they have to do to keep people able to keep people's ability to borrow more money? Well, they have to keep their credit scores good. If credit scores were to drop, then that's a double whammy, because then people can't borrow money like they normally would because their credit score is lower. And that makes the economy look even worse, because the less debt people can take out, the less money people can borrow, then the worse the economy looks, because that's economic activity dropping off of a cliff. So, of course, they can't allow that to happen. So it's almost incentivizing people to take on debt to get a better credit score is what it looks like. And this was reported out of CNBC and some others here. Continues, while Americans' credit card debt levels have reached a record high of more than $1 trillion, their overall credit health has remained strong, according to a report from credit scoring company Vantage Score. It sounds like they've got the same talking points as the U.S. Treasury. Janet Yellen's always out there saying the U.S. consumer is strong, they're resilient, and also Jerome Powell, right? Same talking points. And it continues here. Despite the record credit card debt, the average Vantage credit score held steady. Meanwhile, the national average FICO score rose 2 points from a year ago to reach a new high of 718. Folks, with all this debt out there right now, again, way worse than the financial crisis, we have an average FICO score in the U.S. of 718. That's a pretty good FICO score, not bad. Why is this happening? Why would debt be looked at as a positive thing and people's credit scores are increasing? Well, if you make your payments on time, that's looked at as a good thing. But overall, shouldn't debt be a bad thing? Why would someone want debt to actually be a good thing? Well, if you're a bank trying to make money, you want to have people take out loans, and you want to have people borrow more money and take out credit cards and basically use your products if you're a bank. So putting people in debt's actually good, and they make more money the more debt you're in. And if you can continue to borrow more money, that's even better, because the economy is going to keep shrugging right along with all the consumerism and with all the spending and debt accumulation. And if you look at over the past 10, 12 years with rock bottom interest rates, that's one of the things, and probably the main thing that allowed this economy to look like it was thriving, when in the background, this economic activity and what they call growth was pretty much based on people taking on debt, borrowing money, swiping credit cards. Right? Pretty amazing that they would do this with the credit scores, but I mean, nothing really surprises me anymore. Now, the next thing I wanted to get into was another $1 trillion figure here. U.S. debt interest, just the interest on the debt, is now $1 trillion a year. Think about that, $1 trillion a year just in interest from this money that we borrow. And it's money that's just created out of thin air, but yet the nation pays interest on it. You take out a loan, you have to pay interest on it. Wow. So this is just recently, and this amount has doubled in the past 19 months because of the increase in interest rates. Now, something that we talked about a few days ago, I just wanted to get back to, and that's this jobs added number for October. And the number came in at 150,000. And that was bad. I knew it was bad. It was expected to be 180,000. But something else I didn't get into before, it's a lot worse than I actually thought. And we're going to talk about that here in a second here in a minute. But the jobs that were added, a lot of them were part-time jobs and people taking on second and third jobs, side hustles, gig jobs, all the above made up a bulk of the jobs that were added. But it gets worse. About 1/3 of the 150,000 jobs were government jobs, 51,000. So a little over 1/3 government jobs. Can you imagine if we didn't have a government with the ability to spend unlimited amounts of money and therefore able to hire as many people as they want to because they can just borrow as much money as they need to hire more people, to hire more IRS agents, more government bureaucrats? Can you imagine how much worse this would look if it weren't for the jobs there? We would have had less than 100,000 jobs added. In the meantime, if you look at the new unemployment numbers every week, we're still about 800,000 new unemployed every month. So overall, we're shedding jobs, but you wouldn't know it by looking at the headlines because they don't want you to know the big picture. They just want you to look at the number and say, oh, isn't that great? Oh, we only missed by 30,000. They expected 180. The economy's still good. The consumer's still strong. But yeah, that's what's really happening. The number one added occupation or sector, rather, was healthcare and social assistance jobs. So what does that tell us? We have more population getting sick. If healthcare is the leading jobs added, with social assistance, we have a lot more people needing social programs. That's what it sounds like to me. And that was the bulk. That was 77,200 jobs added for that category in October. And who knows what's going to happen? Maybe at the end of this month or in December, they'll look back and they'll revise it to be even lower. A lot of times what happens is these numbers come out and then it just gets backward revised and lowered a couple months down the road. So it'd be nice if they could just tell us the real numbers up front. And it would be nice if they could fully explain, the reason for these numbers is government spending. Imagine if the government didn't have an unlimited credit card. This would be an absolute nightmare and an even worse disaster than it is already. How many more unemployed people would you have if it weren't for one of the biggest employers, which is the government? And it gets even worse. Listen to this. Manufacturing was the weakest out of all the sectors. In fact, that dropped. Not only did it not add any jobs, we dropped 35,000 jobs in the month of October in manufacturing. Now, a lot of that was due to the strike. But even without the strikes, I mean, that's a lot of people to drop out of the labor force there, 35,000. So you have to wonder how many of these people are going to be needed when the strikes are finally done. And with the drop off in demand, a lot of these people that are on strike are going to be lucky to even have a job to come back to, whether they get the pay raise that they want or not. And when you look at the cost here, the price of oil plunged down to $77 on weak demand. Yes, it is the winter months here. The fall and the winter months are typically less travel, less demand for oil. But this even comes with the production cuts that we've seen out of a lot of the petroleum exporting countries, but yet the oil price is still tanking. Even with inflation, even with everything else, the price is still dropping. So pretty interesting. It almost makes you think there's something big happening behind the scenes or in the background that the bulk of the population's not been made aware of yet. What could that be? Now, back to the credit card debt for just a minute here. Recent numbers here, the third quarter numbers are out, and it's now beyond $1 trillion. It's now $1.08 trillion. In fact, credit card balances spiked by $154 billion year over year. That notches the largest increase since 1999. Folks, we're running up that way faster, way worse than we did leading up to the financial crisis. What's keeping this thing propped up now? It's this money that can continue to be loaned out, and they're keeping the credit scores nice and elevated, right over 700. You notice how it's just slightly over 700. That makes it look a little bit better. So people can continue to borrow money. Banks have no capital requirements. They don't have to keep any reserves in their vaults, so they can continue to loan out money. In fact, there's an article about that. It just came out here out of the Chamber of Commerce. New bank capital requirements could harm businesses and the economy. That's just came out today. So they're pushing for this continuation of this emergency program that started back in 2020. Remember, this was an emergency thing. I call it a thing. This emergency program, this emergency situation where banks were unleashed completely from having any capital in the bank to be able to loan it out. There used to be a 10% requirement. It got slashed down to 0 as a temporary assistance to the banks in 2020 because all the things that went down in 2020. Well, we can't get off of that because it's going to harm the economy. So now it has to be permanent according to the Chamber of Commerce. Folks, this is madness, absolute madness. Banks have to be able to just loan out endless amounts of money out of thin air, basically, just like the printer that you see out of the Fed. And that's the only way to keep this economy going, right? Is fake money, digital money, created at the click of a mouse to give people a way to continue to make purchases and travel and buy things and fill up their tank. Otherwise, it all comes crashing down. It comes to a screeching halt. The streets would be about empty. No one would be able to afford even filling up their tank in their car. That's how bad it would be if this banking system were to go back to what it was pre-2020, folks. And that's one of the continuous bailouts that we're seeing right now. We also have this emergency lending program. Again, that started back in March of this year. It was supposed to be temporary. It's still going. You putting the pieces of the puzzle here together, folks. This is being held together by duct tape and Band-Aids. And I wouldn't be surprised if any day we woke up and this whole system froze up. The debt markets completely implode. And you're going to see Mad Max overnight if that happens. That's when the danger really begins. Speaking of danger, I saw this interesting video out of LA. And we know how bad crime has been rising with the spike in poverty and debt. We also see rising crime. It always happens like that. Right on the freeway, this car smashes into another car. All these guys jump out of the car and they go rob the guy after smashing into him. This guy was a jewelry dealer. So it looks like someone might have followed him. But in the middle of the day on the freeway, on the 10 freeway here in LA, say here in California, Southern California, the crime and the criminals are getting more brazen, is what I'm saying here. And it's likely going to get worse. Just wait until the credit gets shut off, until the credit markets implode or something freezes up where people can't borrow money. Imagine if the banks had to have capital requirements. Could you imagine how much worse it's going to get very, very quickly? All right, so be careful out there, folks. Head on a swivel. Have 30 days, cash, essentials, food, water, ready to go in case this thing comes down. Otherwise, everybody keep stacking. Be careful out there, and we'll see you very soon. Come back to this channel for more updates. Bye now. Peace.